and welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us. So, a very positive session on global markets overnight, which sets us up very well to begin trading here locally. Oil prices fell, European shares jumping more than 1% for their biggest monthly gain in more than a year. Strong US economic data and positive earnings results boosting sentiment on Wall Street, sending the S&P 500 and NASDAQ to new record highs. Both indices recording their biggest monthly percentage gains since 2020. And the volatility index is at its lowest level since prior to the beginning of the war in the Middle East. Well, Apple reported results that beat Wall Street estimates with its new MacBook model leading sales growth, while supply constraints hindered iPhone sales, revenue rising 17% to $111 billion US dollars for the quarter, while it achieved a profit of $2.01 a share. And its shares fell around 1% in after-hours trade. Elsewhere, Alphabet shares, they surged after reporting a record quarter for its cloud unit, while Amazon also rose off the back of its results. However, Meta and Microsoft fell heavily on concerns over AI-related capital expenditure. Atlassian's revenue for the quarter rose 32% year on year to $1.8 billion US dollars, sending its shares soaring more than 18% higher in extended trade. Eli Lilly shares jumped after the drug maker raised its annual profit forecast on sustained weight loss drug demand. Caterpillar shares hit a record high following the company's increase in first quarter profit due to strong demand for its power generation and construction equipment. MasterCard beat Wall Street estimates for first quarter profit as resilient consumer spending supported sustained transaction volumes on its network. And Reddit forecast second quarter revenue above analyst estimates, betting on its AI-powered tools to boost advertising on the platform, setting its shares up around 9% in extended trade. Well, US economic growth regained speed in the first quarter, growing at a 2% annualised rate as businesses boosted investment in AI and government spending rebounded. But the pickup is seen as temporary, with the Middle East conflict raising inflation and eroding household purchasing power. Meanwhile, the European Central Bank left interest rates unchanged as expected, but policymakers debated a hike to combat soaring inflation, with it jumping to 3% in April, well above the ECB's 2% target. And the Bank of England kept its policy rate on hold at 3.75%, as widely expected. Governor Andrew Bailey saying it would be a mistake to wait to see second round effects before acting, because then it would be too late. Global bond yields have fallen as oil prices retreated from four-year highs. The US two-year yield falling to 3.88%. The 10-year was at 4.88%. However, Australian three-year government bond yields rose to 4.7%. The 10-year was at 5.03%. The US dollar has fallen to its lowest level against the yen in 2 months after Japan intervened to prop up its currency, its first official currency action in nearly 2 years. That sent the Japanese currency up around 3% against the US dollar. The Aussie has risen to 72 US cents. Well, Iran has said it would respond with long and painful strikes on US positions if Washington renewed attacks on the country, while it also restated its claim to exercise control over the Strait of Hormuz. Oil prices, they eased, however, after hitting a four-year high of more than $126 a barrel earlier on Thursday. Brent crude futures settling down around 3.5% at close to $114 a barrel. Gold rose on a softer US dollar and easing oil prices, but registered a second straight monthly decline as inflation concerns amid the ongoing Iran war cloud the outlook for interest rate cuts. Spot gold around $4,620 an ounce. Copper rose 1.5%. Iron ore was at 110 US a ton, and Bitcoin trading above 76,000 US dollars. Let's get across those moves on Wall Street now. Brad Gastwirth joining us from Circular Technology. Brad, welcome back. Lots of key earnings results to get across. We just had Apple, we'll get to that in a moment. Prior session, Meta, Microsoft, Amazon, Alphabet. Very much a focus there on capex. That spending is continuing at a pace. Is that of concern for investors, do you think?
Yeah, Andrew, that's, I think, the trillion-dollar question here. I mean, absolutely, capex has been increasing, and even now this quarter, that's going to be increasing more for the year. I mean, we're talking over $500 billion, over $650 billion from the top, mega cap companies combined to spend in artificial intelligence infrastructure. I mean, it's unheard of levels. And that's certainly why, some of the mega caps traded off when you got Facebook taking it on the chin when they talked about increased investment. Ultimately, I think you're going to continue to see increased investment. To your question, Andrew, is it a concern? I think if they don't get returns on their investment, absolutely, it will be a concern in future quarters.
Let's break this down a little, beginning with Meta there. Look, it's the outstanding one just as far as what it is spending. It is eye-watering. Brad, its shares have come off considerably off the back of its forecast capex spending there. What do you see as this playing out for Meta? It is a big bet. Is it likely to pay off?
Yeah, I mean, and it's the right question, Andrew, for sure. I mean, first and foremost, I think investors did not like the spend uptick. I mean, already you're spending at unprecedented levels. When you're talking anywhere near 150 to 200 billion annually, I mean, these capex numbers are just unheard of and unprecedented. But I also don't think investors like some of the comments that we heard, blaming the Iran war for some of the weakness. I think that is never a good sign to, sort of make this blame on macro events. I think that was also something investors did not like. Now, do I think this will be long-lived? I actually don't. I think Meta, is spending a tremendous amount and they will find an answer. I think most problems can be solved with time and money. They certainly have the money to make these investments. But yeah, I mean, in terms of the investor appetite, I think there still is. I think you shook out some near-term and fast money, but ultimately the company's still in the right place and investing in the right spot.
Similarly, Alphabet, Amazon continuing their spending as well tied to AI. Well, Alphabet position, Brad, would you say, as one of the real winners at the moment?
Yeah, I mean, they're certainly executing on all levels. I mean, they're seeing more return on their investment. They have a tremendous following going into their ASIC design. So their ASIC is actually their own semiconductor that competes with an Nvidia GPU. But you're seeing some very large numbers of companies that are interested in their ASIC design, mostly for inference, but for other parts as well. That's doing incredibly well. YouTube is doing very well. I mean, the company's executing, it's still in the right spot. And I think all of these mega caps are really, going to do quite well still over the next several years. But Alphabet is sort of running ahead right now.
All right. And where does Microsoft fall into that category then?
Yeah, I mean, Microsoft's a little bit of a different play because you have enterprise software, with their whole Office suite. Actually, adding the AI component is basically all margin for them. And that's been incredibly strong. They've done a really good job with upsales to that AI, adding onto the suite of products that they already offer on the enterprise side. They're also spending, quite a bit of money increasing their AI infrastructure, as you know, Andrew. And I think there's some concerns on how long and how much people, these companies will spend. The way that I'm sort of breaking this down is until we get to that artificial general or that artificial super intelligence, spending will be increasingly high. So I think when we achieve those, metrics and goals, then you'll see some of these companies back off. But right now it's a race to be the first to achieve them.
Brad, I see you point out that bottlenecks are multiplying. In what sense? In particular, you talk about supply constraints there, component costs rising, the cost of inflation as well.
Yeah, and Andrew, great point here. I mean, I think across the board, and I think we were quite early actually talking about the memory side. I mean, it was last year when we talked about memory likely to increase significantly in 2026, which played out and is continuing to play out. But outside of memory, I mean, GPUs clearly have been tight. You have hard disk drives, which is the storage aspect, are incredibly tight. I mean, they're basically allocated for the next 2 years. Solid state drives, which can replace some of these hard disk drives. Now pricing is going up dramatically on that front. And even on the CPU side, we just heard from Intel and their AI server CPUs are doing incredibly well, and they're also on allocation. So, these are just the larger components. Now, if you peel back that onion, some of the small parts that most people never even heard of, some of the chemicals that go in, some of the substrate layers, all of these areas are incredibly tight and can be bottlenecks. And we're not even talking about yet the power side, which is a big bottleneck in the future.
Brad, can I get your view on Apple, which reported this morning our time, did beat Wall Street estimates there. Certainly its new MacBook model driving sales growth there, although there were some supply constraints for iPhone sales. Overall, what did you make of that result?
Yeah, I still need to go through it, with a fine tooth pick, Andrew. But the numbers looked fine. I didn't find anything that was like head scratching in terms of that comment. Yeah, I mean that comment stood out pretty, loudly that they're having some supply constraints on the iPhone side. I think ultimately, even on their Mac side, they're going to have some component issues. Just as these prices are increasing, and you're looking at some of the build of materials for iPhone and on their Mac. I mean, the memory side is up, it could be 30% of that total product. So, with prices going up 100% in just a few quarters, I mean, they're going to feel the impact or they're going to push it onto the consumer. I think when you get the new refresh for iPhones, you'll see higher prices because they're not just going to eat it internally. They are going to pass it on. But overall, the numbers look fine, nothing alarming. They still have one of the strongest install bases that's going to continue to treat them well in the future.
Do you expect a reset in terms of strategy, Brad, with the incoming or the new chief executive?
Yeah, I mean, yeah, I think there's a lot of still question marks, and you're getting a handoff in a difficult time, right, Andrew? I mean, they're basically passing the torch in a time of supply constraints, in a time where you're bringing out a brand new form factor, which has been rumored to have some issues. I think they still will launch it on time, but I do think it'll be limited, but it was always expected to be limited. But they need to have some new innovation, right? I mean, you have now a hardware guy taking the lead, and we would hope to think that Apple might have some innovation and some new innovation at some point. Clearly, it's not a 2026 story with innovation, but they will have a new form factor this year, and it'll be interesting to see what the long-term strategy and thoughts will be coming from the new CEO.
Brad, always great to get your analysis. Thanks for joining us from Circular Technology.
Thank you, Andrew.
Let's now turn to the local market, what we can expect. And look, we saw a very positive session on global markets. Look at that. S&P ASX 200 futures up close to 1.5%. So that would break a 8-session losing streak on the ASX. So certainly some positive trends ahead there on the local market. Lots to get across too in terms of some updates, in particular with the interim result from ANZ and Coles, ResMed also coming to us with some updates as well. We'll get across that in just a couple of minutes. Stay with us for the open.